You got it.
Hi, good afternoon. David Hitt here at the Shore Hit Network at Keller Williams here in Los Angeles. And we're talking with Randy DePrima today, a really great local lender, about give us an update on the mortgage market and the virus environment now with purchasing. So welcome, Randy. Thanks for being on.
Thank you.
So Randy, you work for CSMC Mortgage, correct?
That's correct. We're a direct lender, both government as well as conventional and jumbo.
Okay, and you've been in the business over 31 years now, so I understand, correct?
Yes, sir.
Okay, so
Forever.
quite a long time. Okay, so you know quite a bit. So great. Well, there's a few things that a lot of us are wondering about, so I wanted to see if you could clear things up. Regarding the current climate right now, what are you seeing as regards to interest rates and refinances?
Good question. Refinances right now are still very strong. 3-4 weeks ago, we had a downturn in interest rates, obviously, with everything that was starting to happen. That compounded itself. Lenders are buried, and they're still doing the job. It's still difficult, but we don't see interest rates going anywhere for the near future. There's challenges. The different categories of lending has gone away, but as far as the conventional FHA, VA, it's just going to get better again. Right now, we've got overlays being placed on these loans, where FHA used to go down to 580 credit score. Today, they want you up in the 600, 640, 680. So a lot of changes daily.
Okay.
Two will pass.
Yeah, and where are the interest rates right now for a conventional loan?
Right around 4%. 3%. Okay. 3 on a 15-year, 4 on a 30-year.
And what about FHA or VA loans right now?
They're a little lower. They're a little lower right now. FHA and VA. The problem is you have lenders out there right now that are scared to lend, and that's half the problem. So they'll manipulate the interest rate away from what it should be, tied to the mortgage-backed security, 10-year bond yield, to slow down business, to be a little more cautious. They don't want to get stuck holding the bag. They can make you the loan one day, and you pick up the phone the next and ask for a 90-day reprieve. Well, the servicer has to make that payment. So there's a lot of caution out there. So they're going to manipulate the rates. And as you see the optimism today in the stock market, up 1,500 points, that just tells me that as soon as this thing settles down and we see some stabilization of the curve, right, we're going to see things come back really strong.
Okay, and what about in reference to jumbo loans right now? I understand there are a lot of lenders that have left the market because they're uncertain. Is that correct?
So that's true. So about 3 weeks ago, the non-QM lenders, which are the bank statement loans, the traditional loans that they would make for the people that don't show their income or can't qualify traditionally with tax returns, they've all closed the doors. Wall Street has no interest in that type of business. Kind of remind me of the old days when we were Washington Mutual was doing those NAGAM 1.25% loans, and they stopped. They've furloughed everybody. So and they forecasted that to increase 40% over last year. And suddenly people are furloughed and out of jobs. So then the next category would be jumbo. Those are your big banks, Wells Fargo, Chase. They're having a tough time because Wall Street doesn't have a big appetite for them either, but they're still doing business. It's just taking longer, and they're a little more selective.
So for jumbo loans right now, what are the options for people out there?
For jumbo loans?
Mm-hmm.
Be patient.
Anything over, be patient, and that would be a loan over what, 417?
In LA County, that'd be over 765, 600.
Over a purchase
so conforming
price.
That's a loan amount.
The loan amount, okay.
So anything over 765,600 in LA County would be considered jumbo.
And what are those options available to those people right now? You said be patient.
Be patient. They're looking for 20% down. You know, the lenders out there that were doing 10% to 2 million or 10% to a million just aren't out there right now, simply because Wall Street is being very, very selective in what they choose. But
Sure.
you know, if you qualify, and you've got the credit score and the reserves, they're looking for reserves. They're looking for, you know, they want to see 12 months reserves. So, you know, it'll ease up again.
What are you seeing out as far as program changes in loans? What is that looking like?
Well, the lenders have placed what's called overlays on their loans right now, and each lender is different. So some lenders, for example, if you're self-employed, they're cutting 25% of your income away from qualifying. They don't know if you're going to have a job or if there's business out there for you. So they're making changes such as raising the FICO minimum requirements. FHA loan, if you use gift funds for reserves or for down payment, they're raising the FICO score to 700, some lenders. So a lot of overlays that are changing daily, you know, between appraisal situations and appraisers wanting to appraise, to notaries, to the loan being sellable. And then you compound that with the CARES Act, and whether it's a forbearance or not, it's really got a lot of people anxious and confused out there.
So that's great that you brought up the two things that I'm curious about. First thing is what do we need to know about appraisals right now?
Fannie Freddie this weekend had come out and said they were going to try to do a drive-by appraisal, which everyone was in favor of. That kept everybody safe. Haven't seen that too much, unfortunately. They had said that they're going to try to change the module a little bit, so on refinances, that met certain requirements, you would need an appraisal altogether. Haven't seen that so much either. But the appraisals are still working. They're still out there. I've got 4 or 5 going on right as we speak. So, you know, it's just a challenge.
That are willing to go to homes and do appraisals, correct?
Correct. They give the borrower the opportunity. Do you want to be in the house with me? Do you want to be outside? What would you like? You know, they're wearing gloves and masks, same thing as the notaries. So, you know, they're still doing business. Some appraisers don't want to. They're being a little more cautious, but it's still moving forward.
So I would imagine
the other
that
challenge.
Sorry, go ahead.
Go ahead. No, I'm done. Go ahead.
No, what about, so appraisals will probably be taking a little bit longer. Would you agree with that?
They are. Yes, simply because the market was saturated already. The lenders took in a tremendous amount of volume on locked loans, right? Then you got people working from home. So they're not going to be as fast as efficient. You've got your troubles trying to get escrow documents, trying to get the appraisal in, trying to get a work verification done. Well, those people are on you know, at home as well. So it's just a slower process right now, but it's still moving through.
And so as far as time frames in a contract, if you're going to write an offer today, what sorts of time frames would you recommend that a buyer write in? Escrow and like loan and appraisal time frames.
Time frames, good question. On loan contingency, I would write in 21 days at least. You know, I wouldn't try to close an escrow in less than 45 days today. Appraisal, probably, you're still probably fine with 17 to 21 days. You're okay there. So it's just the whole overall process is taking a little bit longer. And I think people are being respectful of that. I think they realize, you know, you've got one going now, David, that the small one you have in the Valley. How is that going? What have you seen on Camarillo Street, I think?
Yeah, it's going along well. It's going along well. Ron is handling mostly that file. But from what I understand, so what you're saying is if you're writing an offer today with the buyer, you want to write in probably at least a 45-day escrow and leave the timeframes that are standard in the contract for the appraisal and the loan. Leaving the appraisal at 17 days and leaving the the loan at 21 days. Would you say that's correct?
Yes, sir.
Would you recommend?
That'd be my opinion.
Great. So the delays are probably like escrows at least taking a couple weeks longer. If somebody wanted to do a 30-day, count on it being a 45-day escrow realistically. And now, correct?
Mainly because of the lending side. Yeah.
Mainly because of the lending side. Okay, great. And then what can you tell us?
The other challenge I see.
Go ahead.
Sorry. The other challenge I'm seeing out there is getting inspectors to want to come in and do inspections. Right?
Yeah.
Are you seeing that?
Yeah. No. We
No?
have some that are willing to go out. So,
Right.
but particularly to financing though, we're hearing about forbearance. What can you tell us about forbearance right now?
A lot of confusion on that. It's part of the CARES Act, and what they have set up as part of the act is that you can call, you can email, but you're going to need to show that hardship. They're just not going to hand it to anybody. So you're going to need to actually show that you've been impacted by COVID-19. Then the biggest confusion comes is a lot of the lenders are telling them after 90 days, you're paying us in the balloon payment. Well, okay, so it's a forbearance. You get 90 days, and after 90 days, how are you coming up with 3 months payments? So there's a lot of confusion there. Is it going to be spread out over time? Is it going to be put on the backside of the loan? Or is it all due and payable? Right now, Wells Fargo, B of A, and Chase is telling them, no, it's due and payable after the 90 days. Because don't forget, they have to make that payment for you. So
Right.
A lot of confusion there, a lot of anxiety going on with it right now.
Yeah, but it sounds like that they're going to figure it out. They're not quite have it figured out yet.
Correct.
And from what I understand, from what I'm hearing, that most of these lenders with regard to forbearance are not likely to want them to put it on the end of the loan, that they'll want them
Correct.
to pay it back like within, if they needed to,
12 months.
Within 12 months. Okay, of when the pause was put on making the payments, or 12 months from when it's
12 months from the 91st day.
From the 91st day. So after the day one starts after the 90 days pause on payments.
And bear in mind, there's still a lot of lenders out there that are telling people, no, it's a balloon payment at 91st day. So they're not quite sure right now. It's come out so fast, and I don't think the lenders really know what to do with it yet. But I can't see how, once this is over, you're going to get back to work that fast and be able to make that payment. So I got to see some kind of payment plan worked out.
Yeah, for me, it seems like that's not going to be realistic or feasible. That they're going to have to figure out something else that's going to be more fair towards the borrower to get back to work and be able to, have some money come in to be able to make the first payment. So I have a feeling they're going to have to work out something else other than that. Well, is there anything else that you think that we should know about financing with regard to a home purchase right now with the current market?
It's just interesting times. There's pluses, there's positives to every situation. Right now, for some of my clients, they were the ones trying to buy in the $500,000-$600,000 range, and multiple offers. They were getting outbid. They couldn't get it. Well, as things have slowed down a little bit, they stayed in the market, and they're getting those properties. And I've advised them to do so, because when this ends, there's a lot of pent-up demand. I see the real estate market exploding afterwards through this.
Yeah.
Especially interest rates aren't going anywhere till next year.
Yeah.
And they'll get down to levels where they should be right now. They should be lower than we are, but they're being held up for a lot of reasons, as we discussed earlier.
Yeah. And you're right. You did touch on home inspectors. It's like appraisers right now. There's probably a handful of them, maybe a little less, that are doing them, and a lot of others are just putting them on hold right now. But it's just finding home inspectors and appraisers that are still willing to go out. If you have to purchase today, if you have to purchase, but there are home purchases and home sales still going on from what I can see. And it sounds like from where you are as well, your clients are buying, and you're still seeing deals come together.
The higher end has slowed up, obviously, because they have more invested in the stock market, retirement accounts. So they're taking a wait and see game, as opposed to your first time buyers and the lower end realize it's an opportunity for them to get in without being outbid and being overpriced.
That's a great point that you put in, that put out there that it is a good time because there's going to be less competition out there, buyers looking
Absolutely.
and competing for properties. So that's great.
That's what I'm seeing.
Great to know too. All right, cool. Well, Randy, thank you so much for the update today, and let's stay in touch. And if anybody needs to reach you, do you have a website, or have them contact me and I'll give them your contact information?
That'd be wonderful. Just have them contact you, David. Thank you.
Okay. Have a good day, you guys. Thanks, Randy.
You too. Okay. Bye-bye.